According to global research, gamblers lose more than 80% of their winnings within 48 hours, not because of bad luck, but because of psychological momentum. This is the dark truth most traders never see coming. Right after a big win, the risk of losing everything skyrockets quietly, invisibly, and with surprising speed. The emotional high that feels like confidence is actually a neurological trick, one that pushes traders from victory into self-destruction. And the shocking part? The same pattern affects traders, investors, entrepreneurs, and anyone who plays a high-stakes game with money on the line. The strange thing is that big wins feel like the start of something great. They feel like proof that you've figured it out. But under the surface, the mind is entering the most dangerous emotional state in trading: post-win vulnerability. Your brain is releasing reward chemicals that distort perception, amplify confidence, and shut down caution. The win itself isn't dangerous. The chemical reaction is. Why does this matter? Because the moment your mind shifts from deliberate execution to emotional momentum, the game changes. You stop trading your plan and start trading your feelings. You stop managing risk and start managing ego. And you stop seeing the market as a system and start seeing it as a stage where you're the lead actor. This subtle transition is what Mark Douglas called the shift from probability mindset to certainty mindset, and it destroys more traders than losses ever will. The real problem begins when the high of winning creates an illusion of skill. The win suddenly feels repeatable. The market feels predictable. The next trade feels almost guaranteed. And this is the exact moment when traders increase position size, ignore rules, and try to ride the emotional wave into the next expansion. What feels like confidence is actually distorted perception. There's an emotional pattern here that most never recognize. Your mind treats the win as a signal that the environment has become safer than it really is. Brian Tracy explains that the brain naturally relaxes caution when it receives reward reinforcement. In trading, this creates the perfect storm: reduced fear, increased confidence, and a false sense of mastery. Then comes the invisible shift. After the high of victory, your mind doesn't want neutral, it wants more. So even when you try to trade normally, you feel a subtle pull pushing you to take just a little more risk, a little faster entry, a little wider target. And this little more becomes the doorway to the loss spiral. This is where the pattern interrupt is needed. You must realize that the emotional state after winning is not strength. It is instability disguised as momentum. Professionals understand this deeply. They know the most dangerous time to trade is immediately after success. They know the spike of confidence. Jesse Livermore famously withdrew from markets after his biggest wins because he recognized how quickly clarity dissolves when emotions rise. His retreat was not weakness, it was discipline. The pro's mind shifts from excitement to caution, while the amateur mind shifts from caution to excitement. This is the psychological split that determines long-term survival. But there is something even more subtle happening beneath the surface. The identity you hold, winner, achiever, successful trader, creates pressure to maintain the feeling. And that pressure silently pushes you to force opportunities that don't exist. After a win, traders don't just want money, they want validation. They want confirmation that the win wasn't luck. This identity pressure is incredibly dangerous. It leads you to act not from skill, but from fear, the fear of losing the version of yourself you briefly experienced during the win. And ironically, this fear, disguised as confidence, drives traders directly into avoidable losses. Neuroscience reveals why this happens. The prefrontal cortex, responsible for rational decision-making, becomes less active after reward surges. Meanwhile, the emotional centers become more dominant. You temporarily lose access to your sharpest thinking, but you gain access to amplified emotions. That is a lethal combination for a trader. But here's the twist. Your mind doesn't tell you that your thinking is impaired. It tells you you're in peak condition. It tells you you're strong. It tells you you've evolved. And because you believe it, you take trades you normally would never touch. This mental state becomes the silent architect of the downfall. It's not that the next trade was bad. It's that you weren't the same trader who entered the previous one. You shifted, your identity drifted, your emotional blueprint changed. And this shift continues until the market humbles you. That humbling moment often brings a crash of clarity, a sudden awareness of how far you drifted from your own process. And in that moment, traders feel something worse than loss. They feel betrayal from their own mind. This is why the journey of mastering post-win behavior is the hidden path to professional consistency. Controlling your state after losing is important, but controlling your state after winning is the true mark of mastery. Once you understand this pattern, everything changes. The win stops being a trap. It becomes a signal, a message, a reminder that you must shift from emotional momentum back to disciplined execution. This is where the transformation begins, when you finally see that the danger is not in losing, but in what happens right after you win. But this feeling is the exact force that blinds you from seeing the next risk. That psychological high doesn't just elevate you, it disconnects you from reality. This disconnection creates the first major problem, the illusion of control. You start believing you can influence the outcome. You start thinking your win was a sign of future certainty. And this illusion behaves like fog. It blurs your rules, blurs your discipline, and blurs your objective understanding of market behavior. The next shift is instinctive. Without noticing, you begin trading faster. You want to hold on to the winning feeling. You want the next candle to confirm your new status. This rush destroys patience, one of the core foundations of professional trading. Traders underestimate how quickly patience evaporates under emotional reward. Neuroscience shows that reward states increase impulsivity dramatically. You are no longer waiting for setups, you are chasing them. You are reacting instead of executing. This is where Alexander Elder's concept of the inner casino becomes painfully accurate. He explains that the brain, after winning, behaves like a gambler searching for the next high, not the next rational decision. And this internal casino overrides your logic one impulse at a time. You start taking setups you normally dismiss. You enter without your usual confirmation. You increase size because it worked last time. You convince yourself that your new confidence is skill. But the reality is that you're drifting away from your plan. Here's the pattern interrupt. What if the danger isn't the loss that might come next, but the version of you who shows up after the win? Think about that. The enemy isn't the market. It's the shift in your psychology. Jack Schwager's interviews with top traders reveal something surprising. Almost every elite performer stepped back after big wins rather than pushing forward. Why? Because they understood that emotional momentum is the single largest cause of cascading losses. They knew the danger wasn't in losing, it was in feeling invincible. This brings us to the emotional transition that causes the next layer of damage. After a win, you stop trying to protect capital and start trying to protect ego. You want your next trade to be worthy of the new identity you feel. You want to maintain the narrative. And this is why the next loss hits harder. It's not the money you lose, it's the emotional identity that collapses. The loss feels like an attack on the winning version of you. And so the instinct kicks in. Get it back. Recover. Restore the feeling. This is where revenge behavior quietly enters the system. Not always aggressive revenge, but subtle revenge. A slightly bigger size, a slightly faster trade, a slightly weaker justification. These micro decisions create macro problems. Richard Seykota explains that the market acts like a mirror, reflecting your emotional state with brutal efficiency. After a win, the market often reflects your inflated state faster than you expect. And when it does, It feels like betrayal. But here's the shift. That betrayal isn't coming from the market. It's coming from the emotional version of you who took control after the win. The problem is internal, not external. The more you chase the post-win feeling, the further you drift from your disciplined identity. And once identity shifts, behavior follows. You are no longer the trader who earned the win. You become the trader who will eventually lose it. This identity drift continues until something snaps. Either you hit your mental limit or your account forces a pause. And that moment is not weakness. It is an opportunity. It's a signal that your system needs recalibration. The trader who learns to pause after a win, reflect, recalibrate, and return with clarity becomes unstoppable. Because they learn to control the internal spikes instead of being controlled by them. Big wins expose your emotional patterns more than losses ever will. And the trader who studies the psychology behind post-win behavior becomes a different kind of professional, one who doesn't just win, but keeps winning. The moment after a big win is where your true relationship with discipline is revealed. When the emotional wave hits, everything inside you pushes for action. Your mind wants continuation. Your ego wants expansion. Your emotions want repetition. But this urge is exactly the danger zone. This is why Mark Douglas emphasized that the greatest threat to a trader is the feeling of certainty. After a win, certainty grows silently. You start believing that the market is aligned with you. You believe your intuition is enhanced. This creates the illusion of predictability. The illusion of predictability leads to the illusion of immunity. You begin thinking that nothing bad can happen right now. You don't say it out loud, but you feel it. And that feeling manipulates your actions. One of the most destructive parts of post-win psychology is the erosion of standards. Your entry criteria become flexible. Your risk becomes negotiable. Your patience becomes optional. And slowly, without realizing, you are no longer following your trading system. You are following your emotional system. Professionals recognize this shift instantly because they have studied themselves. They know exactly how their mind behaves after reward surges. They expect the distortion, so they counter it before it takes over. This is where a critical question emerges. What is your plan for the moment after you win? Most traders have a plan for losing. Few have a plan for winning. But the plan for winning is more important because that moment defines your identity. Brian Tracy explains that self-discipline is the bridge between goals and accomplishment. After a win, that bridge is tested. The question becomes, will you allow emotion to cross, or will you hold the gate? The transition from stability to emotional vulnerability happens so fast that traders often don't notice until they're already deep into impulsive decisions. But if you can catch just one signal racing thoughts, increased excitement, the urge to increase size, you can interrupt the cycle. Pattern interrupts are powerful here. A pause, a breath, a step away from the screen. Anything that breaks the emotional loop gives your rational mind time to return. Neuroscience shows that interrupting emotional surges reduces impulsivity dramatically. The next challenge is identity. After a win, your identity temporarily inflates. You feel like a higher version of yourself, but this inflated identity is fragile. It demands validation, and validation-seeking behavior leads to impulsive trading. The solution is counterintuitive. You must detach your identity from your winning. You are not your win. You are the disciplined trader who executed your plan. When this identity becomes stable, emotional pressure reduces automatically. Alexander Elder teaches that the market is a place where emotional control determines survival. He explains that uncontrolled wins are as dangerous as uncontrolled losses because both distort perception in different ways. His insight becomes a guiding principle here. To break the cycle, you must shift from emotional performance to mechanical execution. The market rewards consistency, not momentum. It rewards patience, not excitement. And it rewards structure, not emotion. This is where the deeper transformation happens. When you master your emotional spikes after winning, you begin trading like a professional. You no longer chase results. You no longer chase highs. You no longer chase validation. Instead, you chase excellence. A professional trader becomes immune to the emotional drift that destroys the majority. They don't trade because they feel good. They trade because the system says so. They don't take more risk because they feel confident. They take risk because it fits the plan. And the more you reinforce this identity, the stronger your emotional stability becomes. Eventually, the emotional spikes after winning shrink. They lose power. They stop controlling your decisions. That is the moment when your trading elevates to a new level where winning no longer destabilizes you, but strengthens you. Where success becomes a stepping stone instead of a trap. Where the next win deepens discipline instead of weakening it. This is the foundation of professional durability. The turning point comes when you finally understand the hidden truth. You don't lose after winning because of the market. You lose because the version of you who enters the next trade is no longer grounded. That emotional transformation is the unseen enemy, but once you see it, you gain the power to rewrite your entire trading identity. Your first task is to create a post-win routine. Just like pilots follow checklists before flying, traders need a system to reset their mental state after success. This prevents emotional drift from hijacking your execution. Your routine could be as simple as stepping away, reviewing your plan, rechecking your risk parameters, or confirming that your emotional state is stable. Even small actions create powerful psychological resets. This brings us to the deeper part of the transformation: emotional neutrality. Professionals reach a point where winning feels good, but not destabilizing. The emotional spike becomes a wave, not a storm. This neutrality allows them to stay aligned with their trading identity. Richard Seykota explains that your performance improves when your emotional waves flatten. He highlights that emotional neutrality allows the mind to process information objectively without bias from previous wins or losses. The next layer is structural discipline. After a win, your rules matter even more. Your risk limits matter even more. Your patience matters even more. Because this is the time when your emotions want to break every structure you built. Jesse Livermore understood this deeply. He repeatedly stepped away after major victories because he recognized that his own mind was the biggest threat to his capital. He treated his emotions with respect, not fear, not denial, but intelligent respect. This is the mindset you must build. Respect for your emotional patterns, awareness of your vulnerabilities, and commitment to your structure. This is how professionals operate. Neuroscience confirms that repetition rewires emotional responses. The more often you interrupt emotional momentum after wins, the stronger your discipline pathways become. Eventually, your brain stops associating winning with impulsivity. It begins associating winning with discipline. This is the psychological shift that separates the minority who thrive from the majority who crumble. When your mind treats success as a signal for deeper discipline, you become unstoppable. This leads to the final transformation: the identity of a consistent trader. You no longer trade to feel good. You trade to follow a process. You no longer chase emotional highs. You chase mastery. You no longer fear losing your win. You protect your discipline. Your trading becomes cleaner, sharper, calmer. Your emotional waves flatten. Your standards rise. Your confidence stabilizes. And your execution becomes professional. You stop losing after winning big because you no longer become a different trader after a win. You stay grounded. You stay steady. You stay aligned with the identity you built. And this is where mastery begins. You are no longer driven by momentum. You are guided by structure. You are no longer controlled by emotional spikes. You control the state you trade from. You are no longer vulnerable to the psychological traps that destroy so many. You rise above them. When you look closely at the cycle of emotional momentum, a deeper truth begins to emerge, a truth most traders never slow down enough to see. After a big win, you aren't just stepping into your next trade. You're stepping into a completely different psychological state, and unless you understand that shift with absolute clarity, the next phase of your story gets written long before you press another button. Every win creates a narrative. It shapes a temporary identity. It gives you a brief moment where your mind whispers that you've evolved, that you're smarter, sharper, and more tapped into the market than before. But the uncomfortable truth is that when your psychology shifts, your entire framework shifts with it. Your rules bend, your discipline softens, your standards loosen, and in those tiny cracks, your edge begins to crumble. This is the invisible turning point, the moment after a win, when your internal world changes faster than your logical mind can track. Reward chemicals surge through your system and distort the connection between what you feel and what the market really is. That disconnect is where most traders quietly begin their decline. Because while you feel elevated, empowered, even invincible, the market hasn't changed at all. Only you have. Markets don't reward emotional momentum, they punish it. Yet your biology is wired to chase reward, not preserve structure. This primal wiring is why the most dangerous moment in trading is not the loss, it's the win. A win distorts your perception of risk. It tricks your emotional brain into believing danger has decreased. Reward signals make your mind interpret the environment as safer than it truly is, causing you to drop your guard. This is the psychological paradox that destroys more traders than any losing streak after winning. You behave as if the game suddenly became easier. This distortion leads to the first subtle breakdown, rule erosion. It starts quietly. A whisper in the mind says, "You were right last time. You'll be right again." Another says, "Trust the feeling. You're in sync." These whispers don't feel reckless, they feel rational. They feel like growth. But when you trade from emotion instead of structure, you lose the anchor that made you successful in the first place. The second breakdown happens even more silently. Timeline compression. After a win, your brain wants continuation. It wants the next confirmation, the next surge, the next validation hit. Because of this, patience disappears. You stop waiting. You begin predicting. You begin forcing. Time feels slower. Opportunity feels scarce. The gap between trades feels unbearable. This is how the post-win trader becomes the impulsive trader, not because they lack discipline, but because their emotional clock speeds up while the market's clock stays the same. Then comes emotional overconfidence. The moment you feel in tune with the market, you stop respecting uncertainty. You forget that the market does not become more predictable just because you had one good trade. You forget that the win didn't give you foresight, it gave you emotion, and emotion has destroyed more accounts than bad setups ever will. The next stage is what almost nobody recognizes until damage is done: identity validation. After a big win, you don't just want profits. You want to protect the upgraded version of yourself that emerged from the win. You want to prove it wasn't luck. You want to prove you deserve the feeling. This is where subtle overextension begins. A slightly bigger size, a slightly weaker entry, a slightly wider stop, a slightly lower standard. These micro-errors compound until the market finally reminds you of the truth you temporarily forgot. Success didn't upgrade your skill, it upgraded your emotions. And when the loss comes, as it inevitably does, the crash feels far deeper than the monetary hit. It feels like an identity collapse. You don't just lose money, you lose the inflated version of yourself that felt invincible. That collapse triggers the most dangerous phase, the emotional urge to restore what you just lost. This is why revenge trading begins long before losses, it begins after wins. Because revenge isn't always aimed at the market. Sometimes, it's aimed at yourself, at the version you fear slipping away. This internal conflict takes control of your decisions long before you consciously notice. The solution isn't awareness alone. It's structure. You need a post-win ritual, a psychological reset that pulls you back to neutral. Professionals use routines because they understand the deeper truth. Trading isn't just about managing risk. It's about managing states. A post-win protocol is not optional. It is mandatory. The trader who masters this becomes unshakable. Their wins no longer hijack their psychology. Their emotional waves flatten. Their discipline remains intact even when their emotions spike. When winning no longer destabilizes you, you begin to access a new level of consistency and clarity. In the end, what makes traders lose after winning big is not the market, it's the unseen emotional shift inside their own mind. When you finally recognize it, name it, and anticipate it, you gain the power to control it. And that is the moment your wins stop becoming the start of your downfall and start becoming the foundation of your mastery. Because now you understand the real reason traders lose after winning big, and you've built the identity that protects you from it. If you want more powerful trading psychology content like this, training your mind, elevating your identity, and mastering your emotional state, make sure you subscribe to Mind for Trade. Here, we turn traders into professionals.